Can you use history to forecast the future? Of course you can. You extrapolate trends into the future. Now, the financial statements summarize what happened during the past year, if we just think of annual financial statements. Okay, good. That's good for a stewardship report. Listen, we're the shareholders of a major corporation. We hired you professional managers to run the corporation. We want financial statements so you can report your stewardship over our assets that we gave you. Let's see your report. In addition, internally, we're going to want to use those financial statements to reward people who did well and to punish people, reduce the pay of people who didn't do well. So for performance evaluation. We're the owners of the company. We want a stewardship report. In addition, we want to pay people for doing well and not pay them so much for not doing well. But also, if I'm a banker and I get those financial statements, what I really want to know is, can I use these financial statements, this balance sheet and income statement and statement of cash flows, to help me forecast what the company's going to do next year? Because that's really what I want to know. If I loan you money now, I want to know if you're going to perform well enough in the future to pay me back. If I'm a potential investor, I want to know, if I buy into the company now, what kind of earnings am I going to earn in the future? Because I don't get to claim the past earnings. Whoever owned it then gets those. I get to claim the future earnings if I buy the company now or become an investor now. So this is an extremely important function of financial statements. That's what banks want to know. That's what lenders want to know. That's what potential investors want to know. How can we use the financial statements to forecast the future? Future financial statements are called pro-forma financial statements. A pro-forma financial statement could also be called a budgeted financial statement, or a forecasted financial statement, or a projected financial statement. Pro-forma is what we often use, and it sounds pretty sophisticated, and that's a lot of what business education is about. Taking something simple, a forecasted or projected financial statement, and getting a more sophisticated label to put on that simple idea. So there we go. There's our sophisticated label for the day. Pro-forma. It's just a projected or forecasted or budgeted financial statement. It's the financial statements we expect to be generated next year, given certain assumptions. So if these things happen next year, by the end of next year, we expect these to be the financial statements to be created, the pro forma financial statements. If they haven't happened yet, we're doing this a year in advance. In fact, we could do pro forma financial statements for 1, 2, 3, 4, 5 years in advance. We'll just do 1 year, but the concept is the same. We make certain assumptions, we roll those forward through a pro forma process and get projected or pro forma financial statements given what will happen if we do according to our assumptions.